a lot of founders spend many, let's say, if I look at a pitch deck, many slides on the problem. But if you're speaking with a climate tech investor, I think there's a decent probability that we're already well aware to a certain degree about the problem. So you definitely should have that in your presentation, but we're much more curious to hear about the solution.
Hello, everyone, and welcome back to the Clean Techies podcast. This is episode 77 of the show. I'm your host, Silas Maynor, and thank you for joining us on today's episode. Just a reminder, today kicks off our new content focus around VCs and founders, experience and advice to other founders. Obviously, we're in the new year now, and as we mentioned in the last episode, this is what we wanted to do. So really excited for this first episode, kind of in the new, I guess you could say, theme. I know we kind of have already been doing this in the past, but really excited to officially change it here. Before we do get into the episode details, a quick note for any founders listening. If you are a founder in the space seeking funding or looking for partnerships, please consider reaching out. We're always glad to do our best to introduce founders to capital providers that we are aware of as we continue to build out that network, as well as often to make introductions to potential partnership opportunities. And also a quick note to our sponsors, Next Wave Partners. A big thanks to Next Wave Partners for making this show possible. Next Wave are experts in talent acquisition, recruitment, and retention across climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change, you can reach out to Next Wave Partners at next-wavepartners.com or reach out to one of their consultants directly via their LinkedIn page. And again, Next Wave can handle kind of recruitment across various types of needs, whether that's volume or perhaps you have one role in particular that's very difficult to fill. Obviously, there's a lot of job postings going up and a lot of people interested in climate tech. But again, how many candidates apply that are actually qualified sometimes varies a bit in kind of numbers. So definitely consider reaching out to Next Wave if you have particular needs in that space. So let's get into today's episode details. Today, we are joined by Nadav Steinmetz, who is the founder of Nomea, a ClimateTech Venture Capital Firm investing in seed and pre-seed companies throughout the UK, Europe, and Israel. Nadav has a diverse background, having been born in Belgium, raised in Israel, studied university in the States, and is now living in London. So he's worked in a variety of places, including Blackstone. Pretty interesting experience overall, which has led him to his role now. And the key four areas that we did cover today in today's conversation are really Nadav's background and his entrance into climate. We talked a little bit about how he founded One for the Planet. And then we also talked about Nomea in general, their remit, their experience setting up the fund, how they operate, and his advice to others seeking to set up a ClimateTech VC Fund. And then thirdly, we went to his advice to climate tech founders, especially currently in the economic environment that we're seeing, as well as Nadav's future outlook on climate tech in general. And he had a lot of kind of really great insights for the future and how to prepare for that. So really, really great episode, great guest, great speaker, really enjoyed having him on. I'm sure you're going to enjoy it as well. So without any further delay, let's get into our conversation with Nadav Steinmetz. All right, welcome to the show, Nadav. How are you doing?
Good. Thank you for having me.
Absolutely. Super excited to have this conversation, to be frank. Really looking forward to this. I know we scheduled it a while ago. Glad to be recording today. So why don't you just give us a quick introduction to yourself and a little bit about your accomplishments and kind of what you're doing today?
Yeah, of course, with great pleasure. So my name is Nadav Steinmetz. I'm a French-Israeli climate tech investor. A little bit about my personal background. I actually lived in a few different places. Not many people know that, but I was born in Belgium. I've spent most of my childhood growing up in Israel. And at a certain point, I've moved to the States. I did my education and I studied at Columbia University, where I studied economics and philosophy. I actually met my wife on her first day of school in the library. That's why every time students ask me, what's the best advice that you can give to us? I always tell them, go to the library. First of all, you'll get some stuff done in terms of exams and stuff like this. But second of all, who knows, you might meet your future wife. I co-founded a nonprofit organization called One for the World at my time at uni. The organization encourages students and young professionals to pledge 1% of their future income to charity. So the idea back then was that we're so fortunate to go to those elite universities in the States like Columbia, MIT, Harvard, and many others. And we have a huge power and responsibility to make a difference. So One for the World supports highly impactful charities that deliver only the most basic necessities like clean water, bed nets to protect from malaria, food, shelter to people who live in extreme poverty conditions, which based on the World Bank definitions, it's under $1.90 per day. I've also afterwards I've worked in financial services. I've worked in a few different places, from big private equity groups like Blackstone to other places. I've done also types of investments, from leverage buyouts, early and late stage investments. It really has given me quite of a broad perspective and exposure into various sectors. And I think that was also one of those moments that I've realized, and I started to look into ClimateTech. So one of the reasons that I got into ClimateTech, it's not just because it's the right thing to do and we have only one planet, and if we'll keep destroying it, then it will have harsh consequences. But another reason is that there is a massive economic opportunity here. And I've seen it as also working in other companies. So in ClimateTech, and that's what I think, is that decarbonization is probably one of the most profound transformation of how we do almost everything in our lives, from how we move around, so transportation, to what we eat, to how we grow things, to the electricity that we use. So it's not one vertical, like investing in cyber or in fintech or in other things, but it involves many different domains. So I got into ClimateTech. I've co-founded Nomea, and today we're investing in those exciting technologies.
Yeah, this is really fascinating. I think your background is quite interesting. I do want to, I know, double click into a little bit what you mentioned and how you got into climate tech. So was there a specific life experience or things that you saw throughout your career, your early career, that really led you to dig into this, or how did you become aware of it? Because I know a lot of people have an interesting kind of story behind that.
Yeah, I think that's a great question. There were, let's say, personal moments and professional. So I'll start with the personal. There were many moments that I saw how nature is changing, how the biodiversity is changing. I was very privileged. I grew up in a beautiful place in Israel, right by the coast. And now, even now, when I travel back with my wife to Israel, we can see, and I always show her, that the same places where I used to hang out with my family, with my siblings, with my friends, literally don't exist anymore due to rising sea levels. It was just right by the coast. So these are kind of those moments of, okay, it's a good reminder to remind ourselves what we do in climate. On a professional level, there's a few things. First of all, a lot of investors have been very hesitant to enter into the climate tech space because of what happened in CleanTech 1.0. So the first thing was to ask myself, what is different today than in the first round? And then we've developed several answers that I'm happy to dig deeper, from legislation to the availability of capital, to government actions, to to the maturity of technologies, many different aspects. So this is one. The second thing is just seeing also the great talent, and you work in the recruiting space, so you know this very well, but the great talent that is coming into climate. So suddenly I see all of my colleagues, all of my friends, everybody are thinking about building the next venture that will cut emissions and become economically viable. So there were many, many different aspects that led me into Nomea.
Hmm. Yeah, I think this is quite interesting. I really appreciate you sharing that, and I think it's difficult for some people. I think myself, growing up in the middle of nowhere in Wisconsin, it's the weather is extremely erratic. So these types of things for some people throughout the world don't necessarily experience those firsthand effects of climate change, and so
Right.
sometimes for various people, it's hard to really quantify it and understand it. It just sounds like a bunch of scientists talking on TV, right? So I think it's interesting to put it into somebody who's actually been able to see it firsthand. So what I want to do now is maybe shift into talking kind of broadly about Nomea and the remit. So could you talk about, I guess let's just kind of start from the beginning. When you set out to found Nomea, what did you have a certain remit in mind? What was the fundraising process like to raise a fund? Just kind of the beginnings and how that looked.
Raising a first fund, it's a very interesting experience because you have to put yourself out there and speak with many different individuals, family offices, institutions. So it was a very interesting process. It helped us a lot. So the same type of feedback that we're giving to our portfolio companies and different types of entrepreneurs that we speak with, we try to practice what we preach ourselves. So just putting yourself out there, telling your pitch, talking about the investment opportunity. The one when you raise a fund, one of the most important aspects that we might want to dig deeper later is about the deal flow, how you can source investment opportunities better than others. And we've moved to the UK, to London, also specifically for that. It was about 2.5 years ago. We think that London, by far, let's say in Europe, probably only second to the United States, it's the most advanced climate tech ecosystem. So a lot of research is being done in academia, a lot of entrepreneurs, a lot of even capital. So many new funds in climate tech are raising capital right now. Throughout the process, we have sharpened our investment thesis, but I would say that our core philosophy, our core investment strategy, and also our values have remained the same. So we're looking for climate breakthroughs that can both turn into highly successful and highly impactful enterprises. So one, we're looking at what is the emissions reductions potential. This is one. We have our own due diligence. At some instances, we use third parties, but we also do our best to develop strong technical understanding in-house. And the second aspect, it's about the market size, the scalability of the product, the traction that the founders have been able to generate, and all of that have been an unbelievable journey.
Mm-hmm. Yeah, certainly. I'm kind of curious, when you went to raise, what were I guess the sentiment? Because this was when this was happening kind of throughout 2020, correct? Sometime around there. Yep. So what was the general sentiment from the people you're speaking with, and whether it was a little bit of a different sentiment from individuals, family offices, or institutions? I'm just kind of curious what the sentiment was then, perhaps versus now, if you have any kind of context that you can offer.
I mean, there's many things that we can discuss. I'll focus on one aspect. I think the number one aspect that has shifted tremendously is the relationship between software, hardware, and deep tech. So at the beginning, when you spoke about climate, most of, I would say, institutional investors and in the investor base in general was very worried and concerned about anything related to hardware. And the reason is quite simple. I mean, if you look at the traditional VC model throughout the years, investing in anything related to technology, it's mostly software. And we know the reasons related to cost, scalability, et cetera, et cetera. So at the beginning, I think there was a lot of questions around investing in business models that are related to anything related to hardware. So things that you actually have to build stuff. I think in the past 2 years, probably a lot of the world has been educated about what it means to avoid a climate disaster and what it means to reach net zero emissions. So when we talk about CO2 emissions, we cannot just put it in the cloud, right? So we actually have to build things that will allow us to go through transition to a low carbon economy. We talk about transportation, so the transition from internal combustion engine cars to EVs. Okay, so there's plenty of software companies that can accelerate and provide data and many relevant things. But at the same time, you have to build batteries, you have to build those cars. And the same thing applies to ag and food. It applies to the industry sector, to materials. So I think this is one realization that has shifted quite a lot in the past 2 years.
Mm-hmm. Yeah, I do think it is fascinating. That's something I noticed just from kind of what I've seen in the media. It's a lot of these funds saying, "Hey, I'm only gonna invest in software," but to some extent, that's gonna be a limited pool, right? There are solutions out there that will support the climate tech revolution, but in reality, it's about actual physical things changing, right, and being able to decarbonize operations. So I think it is fascinating. I'm also really excited to see how this openness to introducing more of the VC type model into hardware could actually just revolutionize, like outside of the climate side of things, just revolutionize manufacturing and hardware in general, right? The ability to be a little bit more agile in terms of manufacturing. I'm assuming there's going to be some pretty fascinating things come out of that. Um, you mentioned earlier it comes down to for a fund, it comes down to being able to have really good deal flow. Could you speak a little bit more about the way you manage your deal flow, any particular partnerships or scouting programs that you use to work with?
Yeah, we've spent a solid amount of time thinking and strategizing around deal flow. First of all, we have very strong relationships with other players in the industry. So from other VCs, early and late stage, from climate tech accelerators and venture builders. Here in the UK, there's actually a good number of them that are doing a phenomenal job. And we have very strong relationships with all types of investors across the industry. This is one. And we have monthly catch-up calls, and we speak to them quite frequently. So this is one. The second thing is that what we realized over time, that the best way to get the best deal flow is actually to be the most helpful to existing portfolio companies. And the reason is quite simple. The more value that you add to your founders, they would refer you to their friends and to the other people that they recommend and think are building the next exciting venture in climate. So this is another thing that we do through referrals, and we meet a lot of new entrepreneurs through our own network. Additionally, of course, like any other fund, we get a lot of inbounds. I don't know exactly the number on top of my head, but on a weekly basis, either through our website, sometimes through LinkedIn, a lot of founders reach out to us.
Mm-hmm. One thing I'm curious about is of the ratio. I don't know if you have a rough idea in your mind of referrals from existing portfolio companies because there's some kind of trust there versus the inbound, because I know there's a lot of companies seeking to raise. What would you say is usually the ratio of companies that, of all of these different deal flows, where you invest the most typically? Which ones you choose to write a check for?
I think that through referrals, that's the most effective way. Because if somebody that you trust and that you think highly of, so trust is not enough, right? You need to think highly of his own judgment and decision making. If he or she makes an introduction, we've always seen it to be much more effective. Inbounds are always tricky. We have, I think we've been able to improve dramatically in our ability to assess and examine the quality of the deal flow coming from inbounds. But I think referrals are probably, or from our own network, I think it's one of the best ways.
Mm-hmm. Interesting. Yeah, I would assume that there's some level of because of the trust, and they also, if they're good people, right? If you've invested in the right company, they probably can also do some of the sorting for you, essentially, right? You talked about adding the value to your existing portfolio companies. So could you talk a little bit about how you differentiate yourself from other funds? Because I know at one point it almost seemed like the founders had a little bit of choice because they wanted to pick the best funds that had a lot of extra value to bring. So what do you do to differentiate yourself from the others in that way?
Of course, we see ourselves as founder-centric. So we're looking to help in the way that is the most needed by the founder themselves. So the first question that we ask entrepreneurs is how we can help you. That's the first question, and it's going to remain the same one. And what we've learned actually, which is quite interesting, maybe not surprising, that the answer is always different. So it's always case by case. Sometimes it's about product and building a product and strategy. Many times it's actually about hiring, so finding great talent. And today a lot of people, young people as well, are looking to enter into the climate tech, but not only in terms of finding those people, but also understanding the needs of the company and how to prioritize certain positions over the others. Another aspect, of course, is fundraising. As I said before, we have good relationships with other investors, and we're quite collaborative in our approach and in our investment thesis. So we're always very happy to bring to the table other investors. So, I mean, I'm happy to give many other examples, but it's a case by case. And
Mm-hmm. Yeah, I think that is pretty fascinating. I think the network effect, and to some extent, I think it's sometimes a little bit overhyped, but usually the people with if you will, the string, the controlling the purse, right? The purse strings. Those people tend to have the ability to get conversations that some people may not as easily, at least. And then those can be leveraged to build good networks and good partnerships that I think can be valuable to others, assuming they use it for the right means. Um, One thing I wanted to just kind of to close this section would be, what would your advice be to other people looking to start a climate tech venture fund? This could be people starting something for the first time or people coming from traditional VCs looking to get into climate. What would be some of your advice to those folks?
So I think the first question is the why question. Why do you want to do it? So, and that's, it might be a bit obvious and it goes without saying, but this is applicable to anything that you do in life. You have to ask yourself your why at the beginning of the journey. And it doesn't have to be something static. This can be dynamic and your why can evolve over time, right? So our why at Nomea is that we want to accelerate decarbonization. We think this is a mission worth pursuing. So the first question, ask yourself the why question and before you make any decision. The second thing, you have to explore and develop themes within subsectors in climate that you think are attractive. I'll give you an example. So as I said at the beginning, investing in climate tech is not like investing in cyber or in fintech. It's not one vertical. At the end of the day, we emit greenhouse gases, about 51 billion tons every year. Unbelievable, difficult to imagine that. And we do so in many different ways, right? So manufacturing, transportation, ag and food, and many other ways. So you have to develop investment things where you think the growth would be in the future. What type of innovation would excite you? This type of research is extremely interesting. When we started Nomea, we looked a lot at the battery space. We've seen what's been happening in the past 10 years. The price of batteries went down almost 90%. A lot of new innovation coming into the market to increase the energy density, to increase the range of the cars, to expedite the charging time. So we've already had a very strong, solid case for batteries. But at the same time, we had to develop those themes also for many other subsectors. So this is the second advice. The third one is that if you're looking to launch your own fund, I think it's all about people. You need to surround yourself with strong people, with complementary skill set, with complementary experience, and with complementary network.
Mm-hmm. Yeah, this is quite interesting. And I don't know if you mentioned this already, but what are the stages that you typically invest in with Nomea?
We primarily focus now on early stage. So around seed would be our sweet spot right now, which is always, it's a very interesting situation because it's always it's in the very beginning of the journey of the founders, and we like it a lot. We think that's the area where we can add the most value, helping companies to find the right product market fit, help them sign more pilots, more customers, scale their business. So
Mm-hmm. I guess I'm kind of curious. Why did you decide? Did you decide? Maybe you answered it already, but did you decide to do that because of the value you can add there, or just because, you think that that's where the funding was needed? I'm just kind of curious, like a little bit more deeper into that.
two reasons. One reason based on data, and the second reason is more of a personal reason. Based on data, if you look at last year's numbers, only 2% of the total funding that came from venture capital into climate tech went to pre-seed and seed.
Wow.
So 98% of investment went to Series A and onwards. Think about that funding gap. Think about the number of great ideas that don't get funding. So this is one. We looked at the data and we understood that there's a very big opportunity and it's much less crowded in the early stage. The second stage, this is more on a personal belief. I think that if you want to be good at something, you have to enjoy it. You have to enjoy it. You have to be passionate about it, because then you can do it intensively and sometimes obsessively. Investing in early stage, it's something that excites me. I love helping founders build great products, build great services, and scale the operation. So we enjoy it very much, and that was also part of the reason.
Mm-hmm. Interesting. Okay, very cool. It's really fascinating to hear um the methodology behind it, and I think it's something I do believe I picked up on, that there was a lot of when I was looking at some of these reports that came out, there was a lack of that funding into the seed round, which is where you're really going to have a lot if we're going to invent a lot of different things, right? It can't just be investing in the existing technologies. Okay, let's shift over to a little bit more from your perspective as a fund manager to founder advice. So people who, kind of, you obviously see a lot of pitches, you talk to a lot of founders in climate tech. Let's just start really broadly. What would you say are the biggest mistakes that you see founders tending to make, especially at the beginning stages here?
The biggest mistakes, I think that number one is around simplicity. I think when you're building something, it's very easy to get things over complex. But if you think about, maybe you stop for a second now and you think about the best companies that exist out there, the best products that exist out there, they're all quite simple. This is one. The second thing, which is not in contrary to the first point, is that you have to chase big problems. So at Nomea, we're looking for technologies that at scale can reduce a lot of greenhouse gas emissions, that can save a lot of emissions. So we're looking for founders that are trying to solve those big problems. I think this is another advice that early on we always share with entrepreneurs. The third thing is about numbers, which might be obvious, but I think it's very important to know the numbers, understand the climate impact of your technology. I think this is crucial. Maybe we're putting too much weight on emission reduction, but also the impact on nature, the impact on biodiversity, and many, many other things are very important. The last thing is about marketing. So I think we all love great salespeople, and telling a story is extremely important. Sometimes I see founders that are overselling, and I think this can also be a bit counterproductive at times. So you want to be a great salesperson, you want to be able to tell a compelling story, but don't oversell, and be open about your challenges.
Yeah. I think it's probably difficult. There's a lot of people who are not familiar with what sales really is, that are afraid to mention the negatives, right? Because they're afraid that it's going to poke a hole and things are going to sink. But I think in my experience personally with sales, usually admitting the kind of the holes or the things that you're struggling with tends to help humanize you and realize that, hey, I'm a reasonable person. I'm not just looking at only looking at the bright side of things, right? You mentioned earlier in the deal flow process for yourself about inbound, and I'm just kind of curious, kind of putting this in two ways. What are the kind of criteria that you need to see in those pitch decks to decide whether or not, really quickly, whether or not this is worth it? And mainly from the perspective of, if you're a founder putting together these things and doing this pitching, what are the key things to do right to help get your message across so that the funding partner can decide whether or not this makes sense for them?
Yeah, I mean, first thing, typos. I think even if you reach out to someone via email or in a deck, you have to make sure you have to proofread it, send it to some colleagues, to some friends, to make sure that everything looks nice in terms of formatting. I think that's it goes a long way sometimes. The second thing we look at is at the team slide. We want to understand, we talk about technology, innovation, but we're all human beings. We want to understand their experience and what they've done. So it's important to mention, again, not oversell, but mention what you've been able to accomplish throughout your career, and name also those companies where you worked, because many times it's also very synergetic, so it plays in your favor. The third thing is what are you trying to solve? A lot of founders spend let's say, if I look at a pitch deck, many slides on the problem. But if you're speaking with a climate tech investor, I think there's a decent probability that we're already well aware to a certain degree about the problem. So you definitely should have that in your presentation, but we're much more curious to hear about the solution. And discussing the solution is very important. I also see many times founders and entrepreneurs that don't include the business model. You don't have to go too much into detail. At the end of the day, we talk about early stage ventures, so it's completely fine, and it's natural to have many question marks and things that are still under consideration. But you have to have a high level plan in terms of your go-to-market strategy, business model, value proposition, how you're going to acquire customers, and et cetera, et cetera.
Mhm. Interesting. I think that's really helpful. Very tactical advice for people. I think that should be hopefully very helpful. One thing I'm just kind of curious about with the portfolio companies you have now, do there tend to be kind of common mistakes where you have to constantly remind them of certain things? I know I've heard from some people on more of the traditional VC side where it's, especially recently, it's, hey, you need to make sure you're managing your burn properly because fundraising might be difficult in the coming years, blah, blah, blah. What are some of those kind of common mistakes that you are kind of reiterating back over and over again to your portfolio companies now?
I don't want to characterize it as a mistake, but we do emphasize to our portfolio companies to focus on and understand how to prioritize certain things. At the end of the day, we all have limited amount of time. As entrepreneurs and founders, you have tens, if not hundreds, of things that are happening at the same time. So you have to be a very good multitasking person. This is one. So you have to understand, and this is always the advice that we give, is to focus on the right things, okay? And the right things is to build traction. You want to sign pilots if it's early on, customers, make sure that they have a great experience, because at the end of the day, customer service needs to work appropriately. If those customers will be happy, the best thing that they can do is word of mouth. They will tell to other colleagues and other companies, and they might buy your product or service. So you have to focus on what matters, especially early on when time is scarce. You don't have a lot of resources. You probably only have a small team, 2 people, 5, 10, 20 max. So focus on the right things.
Mm-hmm. And then given the current situation, I think, there's a lot of people concerned about a recession. I don't know if it necessarily applies to ClimateTech because it's something that's, still moving forward from my perspective in recruitment. But what are the kind of timing specific advices that you tend to be giving to your portfolio companies at the moment, looking at the next 12 to 18 months?
Again, it's very much case by case because it depends when was the last fundraise that they've had and what is the runway that they have. The generic advice that we give, that first of all, you want to be thoughtful in terms of your expenses and make sure that you don't exceed your budget for your monthly burn rate. This is one. Second thing, and maybe before I go into the other points, I think that ClimateTech is in a much better position now when you look at the global market outlook. So we're in an inflationary environment, high interest rates, but ClimateTech, and I've seen an article, I think it was a few weeks ago on Bloomberg, that the title was ClimateTech is recession proof. So I'm not sure I would go all that way because I do think that it has an impact on ClimateTech, but I think that the fundamentals are much stronger. So I think we feel it less than other sectors, and I still think that if you're a good company building a product that is needed, you still have great chances of being successful. But to go back to your points, our advice is, number one, be thoughtful about expenses. 2, make sure that in many cases you can do the same thing that you can do today with less people. So we don't recommend layoffing individuals, but we're always thinking about productivity. You need to think about what is your own productivity, and the same thing applies to your employees. And the third thing is just to continue what you do. So it's about scale. You need to replicate, find more customers, scale your product, and move forward.
Mm-hmm. Yeah, one thing you mentioned, obviously, I guess the outlook for climate tech companies being to some extent kind of like recession proof, or at least having a stronger outlook. I think the reason why, what I've noticed at least, is why this is because there's such an intentional outlook on everything they're doing. They're really thinking in very, very, kind of minute detail about every aspect of their product, because in order to make most of these climate tech companies successful, they know that they have to have a clean product that's also usually better in terms of the actual quality, and also usually in most cases it's also cheaper, right? So they're being attentive to everything, and I just feel like it's a kind of another level of founder that's required, because these people are very intentional and very holistic, and they go into the nuance of everything, rather than just this idea, which I think is pretty common in Silicon Valley, of just raise a bunch of money and just throw it at the wall and do a bunch of stuff, and eventually you hopefully strike gold, right? So I think that that's really fascinating to me about the way people are approaching. It's a very sophisticated type of founder from what I've seen in climate tech so far. I don't know if you would share that sentiment or not.
I think I completely agree. I think also on the other hand, when you think about which market or which segment in the market is in a better position in terms of the economic recession that is taking place right now, it's all about what would be desired in the future. So what type of technologies would still be needed, right? I mean, that's how the market works. And I think in climate, I mean, those solutions will be desperately needed. So if we think about I mean, from alternative proteins to carbon removals, to producing low carbon cement, to batteries that we've mentioned before, sustainable aviation fuel, you name it. I mean, all of those solutions will have to be commercialized. For years, for decades, our economic growth on this planet was linked to carbon consumption, right? And I'm not saying that in a negative way. At the end of the day, we've been able to build factories, the employment level went up. We've been able to do so much amazing things, right? Today, you can travel from a place to place. You have your iPhone. The level of innovation is unprecedented. Now, we're starting to realize, okay, all of those years where the GDP growth rate was quite impressive, but it came with a cost to the environment. It came with a cost to our planet. It came with a cost to nature, to our ecosystem, to where we live, to the air that we breathe. So right now, we're really at the beginning of a climate tech revolution. So going back to what we said at the beginning, why climate tech is so-called recession-proof is because those solutions will be desperately needed in the future, and there is no other way around it.
Yeah, yeah, absolutely. I think, yeah, I totally agree with you. Shifting to kind of the final key item that I want to go over here, the key topic would be, could you talk a little bit about your market outlook from your sentiment, as well as the other investment shops you speak with, the other funds, for 2023 and beyond? What are the key technologies, for example, that you're keeping an eye on, key trends, things that you're seeing, just generally speaking, kind of looking forward?
Absolutely. So when we talk about climate tech investments, it's easy to divide it into two buckets. So the first bucket is the technologies that we have today that exist already and that we have to scale them. So it's much simpler. And the second bucket is the technologies that don't exist. It means that they're still in the lab or prototype level, and we need to commercialize and bring to the market. Okay, so those are the two buckets. Now, there's a lot of research being done how much emissions each one of those buckets can reduce. Okay, so I think the consensus today is about that the first bucket, so the technologies that exist today, like solar, wind, batteries, electric vehicles, they can reduce global emissions by up to 65%. This is quite impressive. So just by scaling more solar, more PVs, more wind turbines, better and cheaper lithium-ion batteries, cheaper EVs that can compete with internal combustion engine cars, we can reduce global emissions by up to 65%. The second bucket, which we at Nomea, we focus primarily on this one, is reducing it's technologies that don't exist today, so they're still in the lab or still in a prototype level, and they can reduce global emissions by up to 35%. This is very broad still, but it's mostly related to what is called hard to abate sectors. So things in our economy that are very hard to decarbonize. So industry processes where extreme heating is required, like the production of cement, steel, plastic, long haul transportation. So within Nomea, and also in terms of our outlook to the following years, we're thinking about it in terms of those two buckets. So I can give you also examples from our portfolio companies, but we invest either if it's in the first bucket, so we invest in companies and technologies that accelerate the adoption of the existing technologies, like solar, like wind, like batteries, and et cetera, et cetera. Or the second thing, we invest in new innovations of things that don't exist today, but hopefully will exist in the near future, and we'll help them commercialize to reduce emissions. There's like any other investors. I mean, there are certain areas that we're more bullish on. There are other areas that we're, I would say, still very much interested and curious, but and are following closely, but haven't taken immediate steps and haven't invested yet.
Mm-hmm. Of the second bucket of the companies that maybe don't exist yet, or the technologies that don't exist, what are some of the key specific areas that you're really like keeping an eye on? You think that there's people getting close to it? That's some interesting technologies or things or areas for people to focus on.
Yeah, recently we're spending a good amount of time looking into industry processes. I know it doesn't sound like a very sexy topic, but industrial processes are very polluting. So we started researching and understanding what's happening in those spaces. I'll give you one statistic. So cement production, only cement by itself, is responsible for about 8% of total greenhouse gases. And the reason is it's not just because of the furnaces and the temperature and all of the heating required, is also because of the chemical compound. So when cement decomposes, it releases CO2 into the atmosphere. So while researching this, we've understood that we have to invest in alternative solutions other than limestone, other types of rocks that can be, the backbone of buildings and future bridges, infrastructure, et cetera, et cetera. So we spent a good amount of time into industry processes. Another thing that we've been following very closely is carbon removals. It's a very hot topic for anyone involved in climate tech. So if from founders and investors, there's a joke, that if you're a climate tech investor, a founder, you probably are talking about carbon removals. And it can be divided into many different buckets, from direct air capture, DAC, to biochar, biomass, mineralization, ocean solutions. So we're looking at it systematically across those different categories to understand the value, the economics, how much would it cost to remove a CO2 out of the atmosphere and store it underground or sell it as a byproduct. So this is another area that we're looking closely.
Mm-hmm. What about kind of to flip the coin a little bit? What are some of the areas where you think, I guess it could be two things, just kind of concerns that you have going forward, some of the things that, especially in the next 12 months, you're a little bit concerned about, or perhaps it could be technologies that you think are perhaps oversaturated with different companies in them, or just head fakes that you think like, hey, this doesn't seem like it's going to make a lot of sense for me in my mind.
Yeah. So within climate, the sector that attracts the most amount of capital is transportation. I think the second one is energy, which makes sense. Within transportation, in my view, there are certain areas that receive too much attention and too much capital. I can give you one example, which is micromobility. Now, we've all seen those scooters, all over the big cities in America, in Europe and elsewhere as well. And I have nothing against it. It's actually, I've read it, a few of them, and it's always been a lot of fun. But I'm not sure in terms of the climate impact, whether it has the same climate impact as other technologies that we've just mentioned before, like low carbon cement, carbon removal. So when we're thinking about new investment, we're thinking how we can be the most helpful and how we can reduce the most amount of greenhouse gas emissions. So micromobility probably wouldn't be a good fit for our investment criteria at Nomea. This is one. The second thing, another area that receives a lot of attention, primarily from the media, I think, is the intersection of climate with crypto, with blockchain. And I don't want to say that I'm not convinced, because I think there's certain areas where blockchain can be very valuable, being a decentralized platform, perhaps maybe in carbon markets. Maybe this is for others to argue this way or another. But I think it might be overhyped as well in terms of the level of funding that is getting there. And yeah, so these are two examples. Again, I don't want to dismiss those two areas of investment. And if they bring new capital into ClimateTech, then I would be supportive. But we have to always think ourselves, what is the climate impact? We have to look at the numbers, and we have to understand what are the alternatives.
Mm-hmm. Yeah, I think it is interesting to hear that. I think it's also difficult, probably from a perspective of there's in every situation where there's a big market change, right? Where there's a lot of hype going around it. There's certainly many people getting into it just because they see an opportunity. They may not actually believe in the space. They may not truly understand the nuances of, kind of the movement behind it, and they're just trying to pile in and do something cool and maybe not necessarily really helpful, right? Or something that's easier to do, something that's a little bit easier, kind of barriers to entry or lower barriers to entry. So it is interesting to see that. One thing that I feel like, and I was kind of keen to get your thoughts on this one too, is that I've noticed there seems to be just thousands and thousands of ESG data tracking companies that have come up, and all of them have very little traction, or a lot of them have very little traction, and then a few kind of take the cake, really. I don't know if that's something you've also seen at all.
Right. Yeah. That's what we've seen as well. Another example is carbon accounting, where
Mm-hmm.
there's a very crowded space with many companies raising a lot of capital. So again, we're looking for technologies that might receive less attention, but where we think might have a greater impact in terms of emissions reductions.
Mm-hmm.
Not
Yeah.
to say that carbon accounting is not important. At the end of the day, if we want to decarbonize the operations of big corporations, so they have to be able to quantify and understand the carbon footprint of their company. But at the same time, there's many other exciting innovations to
Mm-hmm.
invest in.
Yeah, I think it's just difficult because of the number of people still just focused on software to some extent. There's a lot of people who just aren't willing to touch the other things. So when they see these opportunities, they pile on top, right? They say, "Hey, let's do it." Um, One thing I think you have probably a really good perspective on this, which would be, what is the key differences that you're seeing between European countries and how they kind of approach climate, or just maybe the differences between the European countries and then the US in particular?
So I've lived in the States for some time, and now I live in London, okay, outside of the EU now because of Brexit. But I'm also half French, so I have a European angle, and and I think there's a few key differences. Uh, One, in terms of capital. So in America, I think there's much more capital raised. It's easier to a certain degree to raise capital, a lot of competition. But at the end of the day, it's a huge advantage because there's the funding availability to early stage companies and late stage companies is greater than Europe. This is one, and we have to admit it, although at Nomea we're focusing on the UK, Europe, and Israel primarily. The second thing is in terms of innovation. I might be biased, but I think that in Europe, there's actually a huge advances in innovation in climate, because a lot of leading universities here in the UK, I can give a few examples, but it's all the famous ones and others. A lot of universities, academic institutions have putting a much greater emphasis on climate. So they have departments that are spending a lot of time and resources into thinking about innovative solutions in climate tech. So this is a big advantage. The third aspect is legislation. Now in the States, after the Biden administration has announced the Inflation Reduction Act, which is a huge milestone. I mean, unbelievable achievement, $370 billion going to climate tech I think it's a great achievement. But still, in Europe, you have the European Green Deal. I think Europe is much more advanced in terms of regulation, legislation, subsidies, giving tax incentives, non-dilutive capital. to companies. So there are many advantages to ClimateTech companies in Europe. And the reason that I've moved to the UK and the reason that we've launched Nomea here in London, it's because what we need here in Europe, it's capital. That's one of the that's one of those things that misses that miss the most in order to take the ecosystem to the next level, in order to help founders build their product and reach scale.
Do you see one quick point on the regulatory side of things? Do you see a lot of proactive effort in Europe on legislation, things like that, to try to get ahead of things? Because I know that usually legislation is pretty reactive. You know, something goes wrong, they get together and say, "Hey, we got to fix this." I know that's certainly the case in the U.S. I'm just kind of curious if there's people who are learning from the kind of past mistakes and saying, "Hey, we need to get some really good minds together to determine how should we regulate these newer technologies and things that are changing kind of the way we operate."
Yes, 100%. I think it's changing and evolving constantly, all the time. At the end of the day, legislation and regulation, they're a product also of public opinion. So for example, in the States, without getting too much into climate, into the politics, because it's a podcast about climate, but the country is quite divided. You know, you have two camps. One camp think that you guys need to do A, the other camp think that you need to do B. In Europe, I think that climate change is much more of a consensus in terms of the steps and in terms of the harm that is being done to the environment due to the concentration of CO2 in the atmosphere. So that's one of the reasons why Europe has been able to be a step ahead of the States. Going back to your question, yes, we see in real time how the legislators are going back, understanding what they should offer, how they should work, how carbon market, you know, it's a classic example, the voluntary carbon market, but many other segments in terms of how those markets should work in the future.
Very good. Well, I think I just have one other kind of key thing I'd like to ask before wrapping up here, which is, generally speaking, I know there's a lot of debate, especially I think from the investor community, around investing into adaptation versus mitigation. And I'm just kind of curious if you have some thoughts on this, generally speaking, or a thesis around it for Nomea.
When we think about investing in climate, we have to be also very brutally, I would say, brutally honest with ourselves in terms of where we stand today. Okay, I don't want to get too much into the details about, you know, what happened in the 2015 Paris Accord, or even, you know, a few months ago in COP in Sharm el-Sheikh in Egypt. But many scientists are getting quite pessimistic about our ability to limit the rise in temperature in 1.5 degrees. I don't say that I agree with that. By nature, I'm an optimistic person. I decide to invest in high risk, high reward ventures. So I think this is a product of my personality. But being brutally honest about the situation that exists today should also inform our decision making moving forward. That is to say that I think that much more capital needs to be allocated towards adaptation. I have to review the numbers. I think about over 90% of investment in climate goes to mitigation, which is crucial, again, crucial, but adaptation is definitely requires more attention. So when we talk about adaptation, we talk about how would life look like on Earth years from now, and will we have the tools and the ability to live fulfilling lives? So we spoke throughout our conversation the fact that many founders and also many VCs preferring with a strong preference towards software. So on the adaptation side, this is a great opportunity for founders with that type of skill set to apply their experience. For example, from climate risk platforms, weather forecasting, satellite imagery. I mean, there's so many examples because at the end of the day, we'll have to understand, just one example, we'll have to understand the frequency of future heat waves. We've had a heat wave here in London in the UK last summer. Mid-July, it was the hottest recorded day in the history of the UK. I don't know if you saw that on the news. I was here with my wife. It was, I think, July 19th. Temperatures that hit over 40 degrees. So in the future, the same heat wave that we had in London would occur much more frequently. This will have a huge impact on our lives. So for example, this summer, the UK Met Office, they announced a national emergency. Most public transportation were closed. They were asking people to stay at home. All of these had a huge economic impact. If in the future, just to focus on this type of example, those heat waves will be stronger in intensity and much more frequent, we have to have the data, we have to have the intelligence to know when are they expected to happen, and to have also the tools to continue our lives as usual.
Mm-hmm. Yeah, I think this the last thing that just comes to mind when you talk about this is, I think this idea that people have a hard time realizing that things will change and there's going to be a lot more disruptions, and that's also going to play a role in kind of corporates focusing on constantly having quarter after quarter of positive earnings, rather than understanding that a business has to be operated in a sustainable way. I think that this mentality of just like always doing anything that it takes to achieve a higher amount of income, even at the expense of others, it has to go away, right? There has to be a more measured approach to these things, because people need to realize that there is going to be a necessity for flexibility in a lot of these things with climate change effects coming. So I think it's an interesting place to leave it. Any final thoughts, or where people can reach you to get in touch if they want to collaborate, looking for funding, etc.?
Absolutely. We're always happy, and we're looking to have conversations with different players in the industry and the ecosystem, whether you're a fellow investor, a founder, a scientist, a domain expert, anything that you do, and you'd like to speak with us, please reach out. Easiest way might be via the website. We have different forms for depends on the type of inquiry, or the LinkedIn, where I'm happy always, and I try to be as responsive as I can on LinkedIn as well.
Very good. Well, it's been a pleasure having you on. I've learned quite a lot today, and I'm really looking forward to being able to share this with people. Hopefully it's very helpful.
Fantastic. Thank you for having me.
Yeah, absolutely. All right. Thank you, everybody, for listening to today's episode with Nadav. If you enjoyed this episode, please do share it with somebody else who might find interesting. Perhaps you know somebody who could really benefit from the advice he shared today. Definitely share it with them. If you enjoyed it as well, we'd always appreciate a review on Apple Podcasts. It really helps grow the reach of the show. And of course, if you're interested in and enjoy the content and want to continue following these conversations with founders in the climate tech space, as well as VCs in the climate tech space, feel free to subscribe and tap the bell for notifications. And then we also do really encourage you to reach out to Nadav directly, check out their website, learn a little bit more about them. Perhaps if you're seeking funding, we're glad to make introductions as well. But a quick note on our next episode, we will be joined by Eric Tergeson from Silicon Foundry. At Silicon Foundry, they're helping corporate VCs make strategic investments. So this conversation centers on their clients' needs, challenges, and general kind of mentality. I thought this one was pretty interesting on how corporates are seeking to adapt to the future. A lot of people give big incumbents like flack for being the problem, being the ones promoting negative climate effects. But when on board, they can really help be a solution for climate change. Is what I've found from this conversation. A lot of these bigger players, these incumbents, are really making significant effort, along with the strong capital that they have. Right? Obviously, you can take issue with how they earn that capital. However, I think what really matters is, are they actually making a change? Perhaps they're just doing it to appease people, but if it's actually producing good results, I think it's quite interesting to look at that and kind of see and know a tree by its fruit. So really exciting episode with Eric. Stay tuned for that next time. And thank you again for joining us on Clean Techies, the podcast. We will see you next time.